Bismillahirrahmanirrahim. Factors or determinants of dividend policy. Factors simply in this case means what are the factors which can affect on dividend policy of the business. And these factors are divided into two parts, can be internal factors as well as external factors. Internal factors and external factors. Number one, internal factors. What are the internal factors which can affect on the dividend policy of the business? Number one, stability and size of earning. Point number one is stability. So we have to divide it into two parts. Point number one, whether dividend of the business is stable or whether dividend of the business is unstable. If dividend of the business is stable, the company may make a dividend policy of a stable dividend policy, as we have discussed in a previous video, right? Regarding different types of dividend policy. One type of dividend policy was a stable dividend policy. When a company can have a stable dividend policy, a company can have a stable dividend policy only if the income of the business is stable. Otherwise, if the income of a business is unstable, it means there is too much fluctuation in the income of the business. On that case, the business should go for the next policy, which is called irregular dividend policy. As well as size of the earning also will affect whether earning of the business is more or whether earning of the business is less. If earning of the business is less, of course, that might be or that may not be sufficient to pay for the shareholders, or that may not be, we can say, suitable to pay for the shareholders. Why? Because that much money or that much profit is needed for the business, for day-to-day operation of the business, or for, we can say, some emergency cases, right? So if there is extra amount of profit, if earning of the business is more, so the company may make a decision to divide some portion of the profit among the shareholders. But on the other side, if size of the earning is less, on that case, so it may not be sufficient for operation of the business. So definitely we will not go for the dividend among the shareholders. So stability and size of the earning is very important. So if earning of the business is stable, the company can go for regular dividend policy or a stable dividend policy. But on the other side, if earning of the business is unstable, so the company may go for irregular dividend policy. Size is also important. If income is more, company may divide. Otherwise, a company may not divide. Second factor which can affect on the dividend policy is liquidity of fund. Liquidity of fund means, so we have to decide whether there is enough or whether there is a sufficient cash or fund available in the business or not. Although the business may make a extra amount of profit or may make a huge amount of profit, but due to, for example, several factors or several reasons, there may not be sufficient cash available in the business. If there is no sufficient cash available in the business, the board of directors may not declare dividend for the shareholders. Why this is so? Why this is so? Because there is no enough fund available in the business. Although we made a good amount of profit, but because, for example, our account receivable is more, or for example, several other reasons are there, or we made investment during there, that is why there is no sufficient cash available in the business, or we can say sufficient fund available in the business for day-to-day operation or future, we can say, expansion as well as emergency cases. So that is why, as there is no sufficient fund available, the company may not go for the dividend. But if the liquidity of the business is good, definitely the company will go for the dividend, right? This is point number 2. Point number 3 is regarding this one: investment opportunity and shareholder preference. Point number 3 is regarding investment opportunities. If the company or board of directors find a good investment opportunity, on that case, they may not pay dividend, so the amount of dividend decrease. But if there is no good investment opportunity, on that case, board of directors may decide to distribute the profit among the shareholders, right? And the next one is, of course, depends on the shareholder preference as well. Sometimes shareholder may prefer to maintain their profit in the business, but sometimes they may prefer to withdraw and use it for day-to-day expenses, or they may make investment by their own. This is another factor. Attitude of management toward control, right? The attitude of management toward control also can affect on the amount of dividend. What do you mean by this one? Definitely, if the company go for dividend, the retained earning of the company will decrease. If the company distribute the profit among the shareholders, the amount of retained earning decrease. If the amount of retained earning decrease, definitely the amount to make investment in the future also is basically decrease. Why? Because if you divide the profit among the shareholders, so cash available in the business will be less. So if cash is less in the business, of course, definitely with this small amount of money, you cannot make a good investment. For that purpose, there are different ways that you can raise funds from the market. One of the way of raising funds from the market is selling more shares in the market. If you sell more share in the market, and of course more shareholder come to the business, as much as number of shareholder increase in the market, the power of existing shareholder decrease, or the control of the existing shareholder decrease in the company. Why this is so? Because shareholders are owner of the business. As much as number of shareholder increase in the market, so increase in the company, definitely the power or the management or the authority of the company will be distributed between them, right? So in this case, the shareholders, in order to do not lose their power, may not prefer to take dividend from the company and basically force the company to issue new shares in the market. So this is called attitude of management toward control. So their attitude also affect on this one. But on the other side, if they're not willing to control basically the board of direct, if they're not willing to control the company and so on, so they may withdraw the profit and they let the board of director to increase the number of share in the market and basically increase the number of shareholder and we can say distribute the power as well among the new coming shareholders in the company. This is another factor which can affect on the dividend policy of the business. Attitude of management toward control. If they want control, so they should not receive dividend. If they don't want control, so they can receive the dividend, right? The next one is past dividend rates. Past dividend rate basically means trend of the company. What was the trend? That some company do not pay dividend at all. Some company do not pay dividend at all. If I'm not wrong, Google company is not paying dividend, right? So they're basically increasing the capital of the shareholder in the business. So it depends on the past performance or on the past policy of the business as well, right? So how was the attitude of management or we can say shareholder in the past? If you, for example, you were supposed to pay dividend in the past, now you have to pay in the future as well. If there was no dividend, so you can escape it now as well, right? Ability to borrow. Next factors which can affect on the dividend of the company. Ability to borrow. If a company is able to borrow quickly from the market, on that case, they may distribute the profit among shareholders. But on the other side, if they are not able to borrow quickly or easily from the market at lower rate of interest, on that case, they may decide to maintain the profit in the business in the form of retained earning. Why this is so? Because if the company is not able to borrow quickly from the market, so how they can manage in the case of emergency cases, right? So on the other side, if the company is able to borrow, on that case, they may distribute the profit. They know that if they face some emergency cases, quickly they can borrow from the market, right? So it depends on the ability of the company as well. If they are able, they will divide. If they are not able, they will not divide. Next one is need to repay debt. If the company need to repay the loan, on that case, they may not distribute the profit. If the company is basically, if there is no repayment of loan, if there is no payment of loan, repayment of, we can say debt, on that case, the company may decide to pay a profit or distribute the profit among the shareholders. Please watch the next video to check the external factors.